So all this remote work is now starting to happen. Almost to the point where people are like, you know what? I'm going to go to Florida and I'm going to work there remotely. And they used to live in Virginia. How, from a tax standpoint, do businesses need to be tracking where their employees are living to ensure that they're reporting that properly?
Yes, the answer is yes. And I think there's going to be not as much of that as you think there's going to be, but yes, some of that's happening. I have people who live in Hawaii who are earning income in Virginia. And so we've got to figure out on the taxes how to figure, like, what do they owe Hawaii versus what do they owe in Virginia? Keeping in mind that if you are earning income from Virginia, Virginia wants its piece of it. And then Hawaii wants its piece of it. So
exactly. Yeah, because that's part, and another reason I think that you cannot stress enough to have an accountant is the fact that as these local and state governments realize that they're not generating the same amount of tax revenue as they were before, I think that they're going to have to make up that deficit somewhere. And I think that you need to make sure that your books, your taxes, everything is totally legit and clean so that you don't have to worry about what happens when I get audited.
Which in that case, when you've got employees working in other states, that's where your payroll company is going to be incredibly important to make sure that you stay on top of all of that all the time. I don't stay up on top of the latest and greatest in payroll laws. I rely on my payroll experts to do that for me. So
gotcha.